Hey, today I really wanted to cover what losses are losses that you should really worry about, and what losses are ones that you should just write off. Because I found in my journey a lot of times that it was hard for me to deal with losses, and a lot of times I was like, okay, cool, let me extract a lesson from every loss. Let me find what was wrong with it or how I can improve. But as you become a real trader, you start to realize that losses are always inevitable, and especially with our type of strategy, if you trade smart money concepts, you're going to have a lot more losses and you're going to have wins likely, because we have a high RR, and therefore you're just going to have a lower strike rate, and that's something you have to deal with. And I think a lot of people don't talk about this in the community because they want to appear like they're amazing and they can call the market and they're like a god. So yeah, I'm going to jump into a trade today from euro dollar. This is a trade that I actually did take, and this is I also took another trade on pound dollar, which I'm going to share today. So yeah, if we just want to go into it, we will start with this trade here. So if we jump on the 4 hour, one of the things you can obviously tell is that price had a massive rundown, right? We're obviously bearish, and we're looking to play pullbacks into some of these zones and then go short. So I was trying to play those ideas, but also understanding that we could go short now. And then when you jump to the 1 hour, it becomes very clear that all during Asia, right? This is Asia. We kind of just range, right? And then what happens after we range? We purge that liquidity and we have a massive rundown. So a purge of liquidity is just sweeping equal lows. There's lots of stop losses placed here from retail money thinking that this is a horizontal resistance line. Price rips it and then moves to the downside. And typically what you'll have is you'll have a return back to the origin of this, which is basically like you'll have a price come back here. So what that tells me is that I can buy up into these areas and then look for sells. Now, as you get closer and closer to this level, it becomes more and more risky because it's counter trend. And this is what I wanted to jump into today. Is basically, I understood that, okay, price moved down, right? We have this internal structure. I would say this is our true range, our A to B movement, but there is internal structure that we just broke barely right here. And we're seeing mitigation to mitigation to mitigation. So this is like internal structure as well. So you're seeing bullish structure, but overall we're bearish, right? Overall we have a bearish range here. And so if you drop to the 5 minute, you can see that price is again bullish, but again, the best place to be looking for buys, right? If you want to take a buy back up into here, and the best risk to reward with lower risk is going to be entering down here. And I wanted to enter down here, but we just didn't really have a setup that I actually, well, we did have a setup, but it didn't actually transpire. And that's part of trading. And this is where I kind of ended up forcing it later in the day. I tried to take this trade that was too high up, and I'll explain the thought process behind that. So I'll share with you the trade that there was. So basically you have price come down, right? We had this strong bullish movement. We're trying to play this pullback. We understand price wants to pull back farther. We get this breakout structure, or an MS as I call it. Price comes, boom, and then we have this order block that's left. This is where I wanted to enter, and price just missed me, right? I had my entry here with a 2 pip stop, basically just trying to play this mitigation to mitigation. Again, we knew that price was at least likely to come up to here and likely into here, so a nice 5 to 7R, but we never got that. So anyway, so then price comes higher and we start seeing what we see: mitigation to mitigation to mitigation, and then price comes and breaks this level, but we just wick it. And that's actually we don't even break, we get no break. So I see this. So I see price coming in here and I get like mitigation to mitigation, right? This is breaks the structure on the 15-second. So I was playing this like seconds time frame idea, and I knew that this was a demand zone that could come and break all of this. And this is what I want to talk about is these are losses that you should worry about because they're not good trades to take. So for example, if you were to draw a premium discount, What is premium and discount? I'll talk about it right now. Basically, premium and discount is if you were to buy something just based on just everyday life, right? You want to buy things that are in the lower half. So basically in 50%. This is discount and this is premium pricing. When stuff is in premium, high up in the zone, you want to sell. And when price is in a discount, you want to buy. So just based on that basic theory and that basic understanding, if you wanted to take supply and demand trading and smart money concepts, you would increase your strike rate so much if you just stuck to only buying when things are in discount and only selling when things are in premium. Obviously pair that with structure, liquidity, all the other things that you learn on this channel and other channels. But the fact that we were in premium, I should have just waited. I should have just waited until price came back down here, or I should have just not entered at all. Like once I miss this entry here, I should just stay out because it's not worth it. So anyways, then we start ranging around, right? And price comes up and breaks this high. And then basically what you see is price tap into this zone. So you have this 15-minute zone, which was the purge, right? The Asia purge, right? This buy to sell. And you can see also these wicks on the lower time frame, right? This wick is a buy to sell. So then basically I came in here and I see yeah, so we have this move up, and then we have, this is a 15-second shift, right? So we have bearish price action. I don't like to take this. I like to wait for a second break. We get a second confirmation, and this is where I enter. Again, this is that supply to demand flip I was telling you all about, and I can share with you guys in the future supply to demand flip. So basically, this is the exchange of buyers to now sellers. This failed to break the high. If we wanted to continue higher, we should break this high. But if we don't break the high and we tap a demand zone, do this and break it, that means that sells are holding and you can take sells. And that's basically what I did here. Now this would have been the best entry. This is the safest because we actually broke. I prefer when we break versus when we still stay within. But I knew that we didn't need to break, and therefore it was better for me to just enter. And so then basically my first target was below this low, because if the expectation is for price to continue lower, right? This is a 15-minute range. Then the next target of liquidity is this low. So basically, if you understand how price moves, right? If you're saying price is going to continue a bearish range, right? And you enter somewhere in here, where's your next target? Here, because this low should be weak. If the trend is to continue, it should break this level. So that should be your first target always. And then you look for other targets alongside here. So first partial for 1 to 6. I think I took like 50% off. So I secured 1 to 3. And then now I'm just letting the rest run. I have my stop above here. And I'm just basically waiting for price to come to this level. This is like some nice liquidity. There's nice demand here. I'll probably exit around here. So like my take profit would probably actually be around here. But yeah, I'm basically looking to exit around this area. And then, yeah, and then I want to go over pound dollar where I took another loss, right? Before I took the win. So imagine my psychology at that point. I have 2 losses under my belt. And then I take a win, right? And that's a big thing that a lot of people don't realize is like, you're not just going to take win after win or 1 loss and 1 win. It's not like that. That's typical of a strategy that is mechanical and, you know, has a lower risk to reward. So you might make a 1 to 2 or 1 to 3. Yeah, your strike rate might be 60, 70%, but I would say your strike rate is going to be around 30, 40% is realistic when you're trading smart money and when you're trading supply and demand. So if we look at the pound dollar, I'm going to go through it really fast, basically. And this is what I'm going to talk about in the video tomorrow is I understand that, okay, 4 hour is obviously bearish, right? But we have this giant imbalance or gap where price didn't get equal exchange of orders, and I'll go into that in another video. But basically my target was understanding that price wanted to pull back because It never got a proper pullback. Again, what is a proper pullback? It should go to 50%. We never made it to 50%, right? Like here, not 50%. So we expect price to go back to 50%. We expect price to fill these imbalance voids. We expect price to want to come to these areas and these demands and supply zones to then head lower. And where is it likely to do that at? It's likely to do it at unmitigated demand zones. Where is an unmitigated demand zone? Well, there's a sell to buy, which is, I think it's more obvious on the daily. Yep, so on the daily, there's a sell to buy. So what does that mean? That this is going to at least cause a pullback. And that's important to remember, because for a long time when I was trading, I always just waited for price to come to here and then go short, and sometimes I wouldn't even do it. And so I'm going to talk about that in the video tomorrow. So if you want to learn more about how to take trades almost every day, or multiple times a week, instead of just waiting for something, I'll talk about that tomorrow. So anyways, we come in here, and then what we see is, ignore this, is just like Wyckoff stuff. I'll explain that another time as well. So what do we see at this point? So at this point, I'm saying, okay, cool. Price is bearish, right? But we just took out this liquidity. And then what do I see? Bullish price action, right? Yes, this is my true 15-minute range. If you haven't seen the first video, I explained why this is my high and this is my low. But within that, we broke this, this, and this. So there's internal structure that is bullish. And that's what made me want to take a buy. So if we go to the 5-minute, you can see, okay, awesome. Price has a pullback, and then we move, and I'm looking to continue this to the upside. And I actually did go to the upside, but again, it goes back to what I said earlier. Where's premium and discount? So you're buying up in premium, which is where you should be selling. And I was trying to play what? And also, we didn't tap anything to the left. We just tapped in balance, but that's not good enough for me. I would have waited for this or this or this before wanting to go long. This alone will save you so much percentage, like honestly. But anyways, I saw break of structure, second break of structure, so I wanted to put my entry here, and I believe I actually had my stop loss below this. And then, actually no, I didn't. Sorry, I didn't actually. I had it below here. So yep, basically just took a loss, and then price ended up going in my favor. And I could have gotten discouraged about that, but the big thing is that I ended up taking a win. And that's one of the big things you have to realize, is that, like, again, you're going to take losses, and you're also going to just have times when you're not correct, and that's okay. Like, chasing and trying to over optimize is actually what's going to throw you off. Just make a simple plan and stick to that. And I think over time you will grow and you will level up a lot, and you'll really learn certain things that make sense to you, and certain things that I might say that resonate with you, and certain things that don't resonate with you. You just got to take bits and pieces and test it and really figure out what makes sense to you and what you really like. And over time, you'll develop a plan and a strategy and a way of looking at the market that's unique to you based on your experiences. And basically, once you do that, you'll be like well off. So yeah, anyways, hope that helps. And just let me know how it was.